Today in crypto. The Uniswap community has approved the governance proposal that sought deployment of Uniswap v3 contracts over the Polygon PoS chain. The approval comes in the form of an on-chain vote that saw the participation of over 72.6 million users from the community. Uniswap Labs announced to deploy Uniswap v3 contracts based on the votes that reflected over 99.3% approval consensus and will be supported by a $20 million fund. $15 million for a long-term liquidity mining campaign and $5 million for the overall adoption of Uniswap on Polygon. Matic. Continue reading on Cointelegraph. Nuvei, online payments solutions, joins hands with FTX Exchange. This partnership ought to bring faster and enhanced crypto trading. Usually, partnerships in the crypto industry are quite common and indeed an everyday thing. In addition, both of the parties will benefit exponentially from each other. Accordingly, Nuvei, one of the largest private banking companies globally acknowledged for its online payment processing solutions, has partnered up with one of the prominent global crypto exchanges, FTX. The partnership, two great domains of two different streams, now join hands together in one single goal of providing a better and faster crypto trade experience. For this purpose, the FTX Exchange will now feature the Nuvei payment options upon its network. Through this, users of FTX could easily deposit their funds and transfer them into the FTX platform efficiently. In addition, the transfer of fiat to crypto Continue reading on CoinQuara. Bonds, a financial instrument popular among classic investors, are finally hitting the cryptocurrency market with decentralized bonds available for a wide category of users. Blockchain platform revealed the launch of an innovative protocol allowing any crypto user to create their own digital asset bonds that were previously unavailable to DeFi traders. The new solution is based on collateralized debt obligations that make it possible to turn any digital asset into a bond via an accessible and straightforward interface mechanism. Each bond corresponds to a specific loan agreement, and users have the option of splitting and bundling the digital assets as bonds for facilitating trading in the secondary market. Considering the fact that bonds are an important tool within any economy, giving companies and governments access to liquidity, the possibility of issuing such instruments on the decentralized market is an important step to bringing it in line with traditional markets. The DeBond project seeks to give DeFi market participants the opportunity of automatically issuing digital asset bonds via the proprietary ERC 3475 standard. The ERC 3475 standard implies the issuance of multiple callable bonds, whereby each is assigned to a unique algorithm and does not require the deployment of additional smart contracts. This allows the new standard to be used for creating both traditional bonds and financial derivatives like futures and options. Bonds have traditionally been seen as an instrument of governments and major corporations. But the market is evolving, and the digital industry, with its flexibility and orientation at users with low entry thresholds, must have such instruments available to anyone. Unlike traditional bonds that rely on the credit endorsement of a single agency, we use the underlying assets controlled by the smart contract and the community to ensure the fulfillment of repayment. As Lu, the founder and CEO of DeBond, commented on the launch of the project's core product. Apart from providing digital asset collateralization, the DeBond ecosystem also gives users access to the DeBond wallet, which is an extension to regular ERC20 wallets like MetaMask, allowing for the centralized display of all ERC 3475 assets. Another service of the DeBond ecosystem is the decentralized bond exchange, which facilitates transactions with bonds using a Dutch auction. The DeBond team is confident that the launch of its innovative solution will give DeFi market participants more options for capitalizing on digital assets and meet the growing demands of both private and corporate members of the market. On Monday, American Banker, a popular publication for top banking leaders, issued its 2022 banking predictions based on survey results of 175 top executives, including C-suite, regional, and divisional execs spanning global and community financial companies. According to the report, cryptocurrencies are going to play a bigger role in traditional banking next year, even though only 2 in 10 financial advisors currently counsel their clients on crypto holdings. Other crypto highlights from the 22-page report include: nearly 40% of those questioned said they are likely/somewhat likely to offer crypto services to retail clients next year. Approximately 10% currently manage Bitcoin or other digital currencies within their client accounts. On average, respondents said 4% of their consumer clients currently own some type of crypto. 60% of survey participants said they expect crypto ownership of their consumer clients to increase in 2022. Only 2% of the industry executives who responded to the survey said their institutions already offer cryptocurrency transactions, but more are preparing to make the leap. As U.S. lawmakers and regulators get their arms around crypto, the survey report further found that about 66% of surveyed executives said more policy work could spur competition on products such as stablecoins. We expect the agencies to provide further clarity on managing risks associated with digital assets, including crypto assets, in 2022, noting that in-flight legislative efforts may significantly alter the regulatory landscape, researchers stated in the report. Data for the American Banker report was gathered from 175 qualified leaders and staff at banks and fintechs of varying sizes who completed an online survey. Just under half of respondents are C-suite and senior business unit executives. Some 42% are division and department heads, senior directors and senior managers and managers. Approximately 1 in 5, or 21%, work at a global or national bank. The same percentage work at community banks. Nearly as many, or 19%, work at regional banks. Some 16% work at credit unions and nearly 1 in 4 work at a fintech firm. On the flip side, the key crypto finding was that nearly 40% of the survey participants reported that they'll be likely/somewhat likely to offer cryptocurrency services next year to consumer customers, not just institutional clients. That is a major development, as banks have been mostly focused on large accounts thus far instead of retail investors. Why you should care? Banks are not going away anytime soon. It's good to see them trying to adapt to the crypto blockchain future for average investors. Email newsletter: join to get the flip side of crypto. Upgrade your inbox and get our daily coin editors picks 1x a week delivered straight to your inbox. Contact Form 7. You can always unsubscribe with just one click. Continue reading on Daily Coin. British telco giant Vodafone, Nasdaq VID, has reportedly plans to auction the world's first short message service, SMS, in the form of a non-fungible token, NFT, on December 21. The SMS, that reads "Merry Christmas," was sent 29 years ago over the Vodafone network on December 3, 1992, and was received by Richard Jarvis, an employee at the time. The historic 15-character-long SMS will be auctioned off as an NFT in a one-off sale conducted by the Augut's auction house in France, according to Romanian news outlet Girol Financiar. Continue reading on Cointelegraph. Hit the like button and subscribe to the channel.